Welcome to a special holiday week edition of Bloomberg Surveillance. Kaylee Lyons and Matt Miller in, Tom, John, and Lisa all on a well-deserved holiday break on what is a shortened trading week and one that is a little bit light on the events, Matt. We don't have too much big economic data or big catalyst events happening in the next 4 days, but we are going to get those small incremental data updates today in just a couple of moments and throughout the week as well. The first one being advanced goods trade balance for the month of November, coming in at negative $83 billion. That is actually less than the estimate.
It's true. It's less bad than the estimate, right? We were looking for negative 96.7 billion. We got negative 83.3 billion. The trade balance, it's interesting. It's something we always pay attention to on holiday weeks when there's nothing else to talk about.
Okay, well, this one might actually be more interesting then. Wholesale inventories, this is the preliminary read for the month of November, a month-on-month figure, actually up 1%. The estimate was only for up about 0.3%. So interesting to see that kind of inventory build, which is the story we have been following for some time now.
Ever since Kathy Wood said inventories are going to lead to deflation.
Right.
She said we were already in a deflationary cycle.
Yes, and we can talk about the merits of that argument. But we have seen this borne out to a certain extent. We are just coming off of the holiday shopping season in which there were actually discounts this year if you wanted to buy presents or if you're hitting the after Christmas sales, because retailers have to work down that inventory and they're cutting prices to do so. So there's your economic data. Let's get you a check now on the markets. Bloomberg's Kriti Gupta is here for that.
Yeah, well, Kaylee, off the economic data, no major moves when it comes to the markets. But I will say in the last hour or so, you have seen a bid, or I should say a little bit of a pairing of the gains that we saw. So we are still seeing green on the screen when it comes to the equity market. But now futures are up only 0.4% relative to almost 0.6% earlier in the session. Something you're seeing in Russell 2000 futures as well. That real outperformance starting to slow down as we get closer and closer to those opening bells. And over in Europe, it is still the same story. Green on the screen, kind of unaffected, but there is one culprit that's leading to these really marginal small moves, but moves nonetheless, and that is the dollar, which is actually starting to see a little bit of a bid. Look, it's still negative on the day when you look at the Bloomberg Dollar Index, but it is climbing. It is pairing some of those losses. So the ripple effects are really crucial, not just in the equity market, which I just pointed out, but in the currency market, of course, the euro really benefiting, or I should say reversing some of its moves. It's now down about 0.1%, but the commodity complex as well, also pairing its original gains. You're seeing copper only up 2% relative to almost a 3% gain about an hour ago, and Brent crude still trading with an 84 handle. So this idea here that the dollar moves are having this ripple effect, I think that's the takeaway about an hour away from the trading bell.
All right, Kriti Gupta with your macro picture. Thank you so much. Let's take a look at the micro picture now, and one company in particular, Uber. Its shares are down more than 40% so far this year, but the company's CEO, Dara Khosrowshahi, is optimistic about the future. He spoke to Bloomberg's Emily Chang.
I want to start with the bigger picture because I just interviewed Airbnb CEO Brian Chesky yesterday, and he told me he thinks a revolution is happening in the way we travel from business to leisure. Do you think a revolution is happening post-pandemic in the businesses that you run, rides and the way we order food, or will life revert?
Well, certainly there's a revolution happening in terms of delivery of all things to your home. It started with food, but it's going to continue with grocery and pharmacy or your iPhone, et cetera. And just in 4 years, our Uber Eats business has gone from a $2.5 billion run rate to a $52 billion run rate. And we think there's so much more to go. Users want what they want at their home right now. You know, it used to be that next day delivery was awesome. Now it's all about next hour delivery. And what we're doing is empowering any local merchant to essentially get anything that you want locally to your home within hours. And clearly eaters and users love it. And we think it's a trend that's going to continue over the next 5 to 10 years.
Now, you just revealed Uber could post its first profit this quarter. What are the levers that you can and will pull to determine whether that happens this quarter or not?
Well, I think what's happening now is our marketplace is becoming much more balanced. If you looked in Q2, the demand for moving around and getting things to your home essentially was increasing at a much faster rate than supply. We had to invest very aggressively to bring more drivers onto the platform, more couriers onto the platform, and you're seeing the benefits of that in Q3, where the marketplace is much more balanced. Our margins are coming back to normal. Our mobility margins actually are going to be equal to pre-pandemic levels, even at lower volume, because of the moves that we've made in terms of automation. And our Uber Eats business is both growing the top line, but now is getting to EBITDA profitability levels as well by the end of the year. So really now things are working out quite well for us, where we can grow the top line, but we can do so profitably on a sustainable basis for some period to come.
Still, you're continuing to work on driver supply around the world. There are price surges that we as riders are certainly feeling. You've said that price surge will ease up by the end of the year. Without that, do you see long-term profitability? Will you hit that milestone quarter after quarter?
Well, absolutely, we do. And we're seeing the prices essentially stabilize now. Our surge levels are coming down. ETAs now are the best that they've been since the beginning of the year. And conversion rates, as far as the percentage of users opening the app and getting the service that they want, whether it's food delivered to their home or whether it's they're going somewhere, all of these metrics are moving in the right direction. So we think we can be profitable, but we can be profitable delivering an amazing experience to riders and eaters, and also really strong earnings level to our earners.
I want to zoom into the UK in particular, where you are seeing longer wait times. Drivers are going to other apps. They're moving on to other sources of income. When do you see a better balance between supply and demand?
Well, I think what we're seeing in the UK is that demand right now in the UK is at 20 to 40% higher than pre-pandemic levels. I mean, the UK is really opening up, and it's amazing to see. The number of drivers that we have on our platform now is as high as it was pre-pandemic, but it hasn't caught up to the growth in supply. So we're going out there in the UK now, and we are looking to bring on 20,000 more drivers onto the platform. The earnings opportunities are better than they ever have been. And as far as the service goes, you know, over 60% of the time you're getting your ride within 5 minutes. 90+% of the time you're getting your ride within 10 minutes. We want it to be faster, but the service is now working the way that we want it to, and there's a ton of earnings opportunities, and hopefully we'll get more drivers onto the platform to catch up to the incredible demand that we're seeing.
DoorDash's market cap briefly surpassed Uber's in the last week. The stock's back up, but it was kind of a close call. A former Uber executive called that a nightmare. He invoked a comparison to Yahoo. How do you respond to that?
Yeah, I think I wouldn't put a lot of credence into that particular former Uber executive. You know, it was a point in time. The fact is, if you look at our volumes are twice as high as DoorDash's, and we're growing faster. Our revenue is 3 times larger than DoorDash, and we're growing faster. And based on third-party data in the U.S., our Uber Eats business is the fastest-growing food delivery platform in the U.S. So we're very confident as to where we're going. And I think this is a point in time in terms of relative market caps that I don't think you're going to see again.
DoorDash is getting into alcohol delivery. Investors are betting they're going to be big in grocery. You did buy the grocery delivery company Corner Shop earlier this year. We saw that partnership with Albertsons, but when are we going to see your grocery efforts really scale up and bear fruit?
Well, I think it makes a lot of sense for DoorDash actually to follow us into alcohol delivery. We've been there for over a year. We have alcohol delivery now available on Eats in over 20 countries. So it makes a lot of sense for them to follow us there. As far as grocery goes, we have focused actually outside the U.S. first. We think we can be the winner in Latin America, which is Corner Shop's home turf, so to speak. We're aggressively expanding grocery in France, in UK, countries like Taiwan, Australia, etc. And in the U.S. now, we have a really strong tie-up with Albertsons and Costco, and we're going to essentially expand with the partners on a local basis.
Meantime, very important situation brewing in Texas. Uber and Lyft have said they'll pay the legal fees of drivers sued under this new Texas law banning abortions. You donated $1 million to Planned Parenthood. If other states passed similar laws, would we see you do this elsewhere? Does Uber support a woman's right to choose on a national level?
Yeah, we absolutely do. And I think more importantly, we don't think that drivers should be sued by private clients. We think that's unprecedented. It's wrong. And if it happens in another state, we're going to stand behind our drivers just like we did in Texas.
Meantime, Dara, your CTO stepped down, and you have made the unusual decision to become acting CTO. So you've got now these highly technical executives reporting into you. I'm so curious, how are you preparing for this new responsibility? That's a really critical job.
It is. You know, I was an engineer back in school, so I get to geek out now. And I think at Uber, we have the best technical capabilities in the space. And my working directly with our top engineers, we have an incredible bench. So, you know, I'm actually looking forward to it. We have a great bench that we're working with, and I think we can keep innovating, and I think we can keep shipping products faster than any of the other local players out there.
So speaking of some of your other bets, you recently made a visit to Joby. You watched one of their flying taxis take off. Of course, you've also got self-driving with Aurora playing out. How do you see these other bets on self-driving cars, flying taxis playing out? Is this the real travel revolution that we need to wait for?
Well, I think all of these technologies are happening. The pace at which they happen, I think, actually is going to depend a lot on the regulatory authorities. The Joby tech in terms of flight range, in terms of sound, is extraordinary. I got to experience it myself. And obviously the certification process is going to be the most important factor in bringing this technology to bear. And with Aurora as well, we're thrilled to be working with them both on the trucking side and the rideshare side. And I think it's about safety first, and the technology leaps that we're seeing there are super encouraging. So these are two best-of-breed teams, along with Lime, who is the leader in terms of e-bikes and scooters in the world. And we have strategic investments in each of these very important areas. And we love our investments because we made the investments in what we believe are the best teams and the leading teams in each area.
Dara Khosrowshahi there from Uber. Coming up on the Open, we're going to get back to rates as we watch the 10-year continue to climb. Right now at 381.28. Priya Misra joins us of TD Securities, Gerson Distenfeld of Alliance Bernstein, Andrew Sliman of Morgan Stanley. On the Open, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. President Biden has declared a state of emergency in New York, where a massive storm dumped more than 4 feet of snow on the city of Buffalo. At least 28 people have died in the region. Meanwhile, Southwest Airlines is still struggling with the nationwide effects of the storm. It canceled almost 3,000 flights Monday. The carrier expects the chaos to last a few more days. Taiwan is sending a signal to the U.S. and China that it's serious about defending itself. President Tsai Ing-wen is extending compulsory military service for men from 4 months to 1 year. Taiwan has been working with the U.S. to strengthen its defenses against a potential Chinese invasion. In Michigan today, a federal judge will sentence a man described as the driving force behind a plot to kidnap Governor Gretchen Whitmer before the 2020 election. Adam Fox could get a life sentence. FBI informants helped law enforcement break up the plot before it could be carried out. Fox's lawyers say he was manipulated by the informants. And Peloton has begun selling refurbished bikes at discounts up to $500 below new model prices. The bikes will cost anywhere from about $1,100 to $2,000. Last month, Peloton disappointed investors with a lower than expected holiday forecast. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Humanity consumes 500 billion cups of coffee every year. That's almost almost double what we consumed a decade ago. And yet, coffee production is one of the most antiquated industries in all of agriculture. Climate pressures like drought, heat, and blight are affecting food producers in different ways all over the world, as climate change becomes something we can taste. In the past year, hundreds of thousands of acres of coffee plantations were wiped out. What's at stake are the livelihoods of around 125 million people. Because, if you're being honest, this is a plant that cannot hold on much longer in a changing climate.
The yield curves inverted like they are, the leading economic indicators acting as they are, and so many indicators would be historically unique to not go into recession. The worse the economy is now, the better the market can be, because the Fed will be able to lower rates even before renewed expectations.
Tony Dwyer, Canaccord Genuity Chief Market Strategist, speaking there. We are gearing up for the first trading day of the last trading week of 2022. And with just about 45 minutes to go until the opening bell, the picture is starting to get a little different and perhaps a little more exciting. We now have futures heading toward session lows. S&P 500 futures right now only up by about 0.1% at 38.73. And actually, NASDAQ 100 futures have now flipped into negative territory. They are down by about 0.2%. So some of the optimism around the China reopening story seems to be giving way to more pessimism as we look to close out what has been a brutal year for the U.S. equity market. We are still on pace for the worst year since 2008. Of course, a lot of that equity pain has been driven by the bond market, and we are getting more movement there as well. The 10-year yield up 7 basis points to 382, a big leg up after what we understand was a big futures block trade. But enough about the markets. I want to talk about football. I am still recovering from the loss of my Denver Broncos to the Rams on Christmas Day, but former Giants quarterback Eli Manning is jumping into a different venture, selling used sports apparel and getting in on private equity. Bloomberg News' Jason Kelly sat down with Manning and BVG's Steve Lebovitz to learn more about their first private equity deal and why it was so important to Manning to acquire and own a company.
Everyone knows Eli Manning, the quirky Giants quarterback, famous for a couple Super Bowl titles and also launching a whole lot of memes. But post-football, he's been on the rise in another business, private equity. I got to sit down with Eli and one of his PE partners, Steve Lebovitz, to discuss Eli's first big deal, and also that time he couldn't speak on the investment committee call because he was in the makeup chair to become Chad Powers. All right, so Eli, tell me about sports and private equity colliding. You're the manifestation of it. Like, how's this all working?
You know, it's a funny time right now where sports are almost becoming an asset class in investing and in different ways that you can just be involved in sports. And it doesn't have to be an ownership of a team, but just adjacent to the sports world, whether it's apparel, whether it's equipment, whether it's real estate or the fan experience. And so it's just an exciting time. Excited, you know, to kind of join the private equity world, but also the fact that kind of the first deal I ever did was in the sports world. Right. So it was a little easier for me to come in there, freely talk about it, and be passionate about what we were doing.
Steve, talk about this idea of of Eli being this almost like canary in the coal mine for like athletes into private equity?
Athletes over time want to have more control over their brands. They want to have more control in general, not just be necessarily a paid spokesperson. That we think is a real trend. That, as well as thinking about private equity as opposed to venture, which historically, my partner Drew always says, you know, athletes are the mentality they want to create the next 3 unicorns, not just one. It's not good enough. With our companies and in private equity, sometimes they have the opportunity to grow the companies, but without the same risk profile of venture. So we think that should be appealing for athletes, and Eli, as you mentioned, is kind of on the forefront of that.
All right, so Eli, your first deal, it's a uniform company. Tell us about discovering it and working on it.
Since I joined BVG, this was kind of the first deal that we were looking to acquire, and it's Score Sports is the name of it, and it's a designer, manufacturer, seller of youth sports uniforms. Well, I was excited just because I love youth sports. I purchase a lot of uniforms and youth uniforms for my own kids, and so and this was interesting to me because it's vertically integrated and they do everything in-house. The price point is at a much lower level than some of these other uniform companies, and so you could get a full kit for $18 to $20 instead of a family having to pay $100 for uniforms. It was interesting for me just to learn the process of the private equity world, and I've pitched many products before, but never pitched a company that I'm trying to encourage you or tell you why you might invest in this and give us money. And so being a part of this and how I can help grow this company, and from the marketing standpoint to the business management to the culture side of it, are all the things I'm looking to get involved in.
Tell me about that pitch process, because one of the interesting things that it does, I think, is it brings you into contact with other former athletes as business people. So not looking across the line at them, not worried that they're going to knock your block off, but more the idea of saying, you know, this is a deal I think you should do.
Well, I would say, I think when you're talking to athletes or former athletes and pitching an idea on youth sports, I think they all have a great appreciation of it. And you know, the idea of getting, you know, kids, and a lot of the people that I went to, former athletes, they have kids. Their kids are playing sports. You understand it is a great business. It is growing. There's more sports available to more kids now, and it is a great deal. And a lot of these athletes wanted to not only invest, but, you know, thought they had connections and communities that they could help get this company involved in to help grow it.
That leads to a really interesting moment, it feels like, for the firm, where you're essentially validating something that you're seeing with Eli as a singular person, but then there's this network of people that you're already somewhat in touch with that then becomes a new business line in some ways. Tell us about that.
Yeah, no, we saw opportunity there, given our network and the connectivity there, and with sports being such a great industry, it's like $500 billion plus global industry. It made a lot of sense for us. We feel like with the folks we know, not just athletes, but with executives, you know, top-notch ones who are involved with our group, we can cover like all the different aspects of a sports business. So we feel like we're really well equipped to offer value to these companies and to bring value, which is, we're not going to do something unless we can do that. But with that, it makes perfect sense for us.
Build on what Steve was talking about earlier about sort of private equity as a vehicle for former athletes versus being a spokesman. What is it about private equity that's attractive to you?
Well, I think for me, it's just the idea of acquiring and owning a company. And I've pitched many endorsements. I still do endorsements and have the idea of that you're pitching a product. This is a little bit different, that you actually have ownership in it, and you're trying to grow it, and you're trying to expand it, and you're, you know, using your connections in ways where you can make a difference and do something good. And I think that's the idea that we're trying to do. And I think, you know, sports are so popular with so many different people for different reasons, from, you know, whether you played it at a youth level or in college. And so there's so many different ways to invest around it. It's a business that's growing rapidly.
And so where does it go from here, Steve? How do you build this business up?
It has to be good investment, or we don't have a firm, you know, no matter how noble our intentions. Can we add value to the company? Is the price right? It's the same sort of questions we ask in our sort of private equity deals. We don't have to swing at a pitch, and we won't swing at a pitch unless, doesn't mean we're always going to be right, but we won't swing unless we're very convinced that we're going to be
That was a baseball reference. I don't know.
I figured it out.
You've got private equity, you've got the Manning cast, you've got endorsements, like how do you sort of put it all together?
It's just time management and coming together. And so I enjoy this part of it, just learning this world, and it is very new, and every day I learn something new about it, and talking with Steve, and I feel like this last year, it's my freshman year of taking private equity 101, and getting to kind of get involved and ask a ton of questions. What interests you? What were red flags? Why is this going to work, not work? What do you like about it, don't? And for so long I was just doing football, and I was so focused on it. That's all I did, and still involved in the game, which I love, and getting to sit on my couch and watch football games and make fun of Peyton is exciting also, and you get to kind of view football in a different way, but also learning private equity and learning the business side and how businesses work and the culture around those businesses is all very interesting, and enjoy the learning process of it.
Eli's time management skills, I have to say, they're unbelievable. Yeah. We have our weekly calls on Wednesday and 11 o'clock, I think. And so Eli, before the call one of the weeks, he says, I'm not going to be able to talk to anybody during this call. I'm going to be completely quiet. So after the call, he sends us a text picture of him as Chad Powers. He was having the makeup put on during our call.
Wow. But I couldn't talk. I couldn't move my mouth. They were working around that area. So I was listening, but they asked a few questions. I was like, I can't move, I can't talk, I can't text, and I'll show you afterwards what's coming from this.
Massive Bills fan, obviously a Giants fan. Could we have an Eli versus Steve Super Bowl?
That would be exciting. I think we would both take that scenario. It would be worth the awkward week of the game, and unfortunately afterwards, that week after, we probably would not talk and just like, all right, let's have a cooling down. But I think that would be a win-win situation for the most part.
Because you've been talking up the Bills. You and I talked a couple months ago, and you were
the Bills are my like adopted AFC team. I think it's New York, it's AFC. The Giants and Bills don't play that often. We kind of have a good experience. The last time we met in a Super Bowl, you might want to forget that one. But,
there are two words I don't ever want to hear again: wide and right.
Yeah, there you go. All right, guys, thank you so much.
Thank you.
And thanks for tuning in on Bloomberg Surveillance today. Matt and I will be back tomorrow. This is Bloomberg.
They've raised their inflation forecast.
Firm and immediate action.
He wants to destroy my country.
Elon Musk to buy Twitter.
Overturned Roe versus Wade.
Boris Johnson will call it
Donald
quits.
Trump's plan to overturn the
Unprecedented search warrant at the home of our former president.
Queen Elizabeth has died.
Xi Jinping got his third consecutive term.
The pound falls to an all-time low.
The shortest ever serving prime minister.
Presidents Biden and Xi shake hands.
FTX filed for bankruptcy.
The red wave that never was.
Protesting his zero COVID policy.
Today, what are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. The problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? The why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
From New York City, for our viewers worldwide, I'm Matt Miller in for John Farrow. On the kickoff to this shortened holiday week, the countdown to the open starts now. We're looking at S&P futures that are unchanged. We were gaining most of the morning, but we've come back to the levels that you see here. NASDAQ futures actually down right now as Tesla drags the index down, and the small caps are unchanged as well. We have 30 minutes until the open.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
We begin with the big issue, looking ahead after a messy 2022.
The volatility to start the year.
It's been a pretty volatile time.
We're seeing that volatility play out.
We have had 10-year Treasury yields break 4%.
This bear market rally in recent months.
Inflation is still elevated.
The biggest factor this year has been man-made volatility,
whether it's fixed income, equities, commodities, currencies.
We have a war, we have Federal Reserve tightening rates. We have all types of things going on in the oil market that are beyond anybody's control.
There's another shoe that has to drop, and that is the economy.
We should see a macroeconomic slowdown, particularly in the U.S.
We'll start to see some disappointment maybe as we move into 2023.
Fundamentally speaking, we do expect 2023 to be, worse than 2022.
We don't think it's going to be necessarily a year of robustness.
So I think expectations need to come down.
The good thing is that it's not the end of the world.
Joining us now is TD's Priya Misra, as well as Gershon Distenfeld of Alliance Bernstein. And of course, 22 was messy, but 2023 doesn't seem like it's going to be much smoother. Priya, let me start with you because we see rates creeping back up right now. The 10-year, last I checked, is hitting 381. And strategists are forecasting a bumpy ride for at least the first half. Do you agree?
Yeah, I would say uncertainty, macroeconomic uncertainty, as well as the reaction function of central banks, global central banks. I think that uncertainty remains with us through the course of next year. I do think some of the growth uncertainty increases because the economy is robust right now. I think there was a lot of pessimism around recession risks over the last month. That can fade. But as the cumulative impact of the global tightening in financial conditions starts to feed through to the consumer, as that savings, accumulated savings buffer starts to run out, we actually think that the economy will, the U.S. economy will head into a recession in the third quarter. So I think the uncertainty around how strong is the consumer, how strong is the economy, I think that will just build through the year. And the other big uncertainty that we've all struggled with this year around inflation, I think that also stays with us. Some of the low-hanging fruit around inflation, I think that's come off. But does the consumer start to slow down in terms of service demand? Does the wage picture start to slow down? How sticky is that inflation going to be? So I think we'll be struggling with a lot of the same issues. How sticky is inflation going to be on the way down? How strong is the consumer? And then how does the Fed navigate what we think is going to be dueling, conflicting mandates? I think that's going to be with us all through next year.
Gershon, what do you think? How does the Fed navigate that landscape? I mean, if we do see if we see bank accounts start to drain out, we're still at very high levels in terms of what consumers have in the bank, but savings rates have fallen dramatically. And what happens, for example, if we see the distressed debt market fall apart, junk bonds fall apart, even investment grade? I mean, does the Fed then come in and pivot?
Well, those are a lot of good questions. And I think what it comes down to, though, is there's still this dichotomy in the marketplace, actually, between what the market expects and what the Fed expects. You know, the market is saying, if you look at Fed funds future pricing, that inflation is going to get under control, the Fed's going to peak another 50, 75 basis points, and then start to cut rates in 2023. While the Fed is being very clear, I think, that they've learned the lesson of the 1970s. They're going to keep rates higher for longer. So you have the market and the Fed kind of not agreeing with each other. And what that means is that every data point that comes in, some of the things you mentioned and other things, we're going to see volatility. There's going to be, you know, what's going to go one way or the other. That's the constant I think we're going to see in 2023. Very hard to predict in terms of returns, but I think the one thing we can be assured of is there'll be continued volatility, especially on economic news.
Well, we certainly see it now, Priya. What do you make of the rates picture today and the volatility we've seen coming into the end of the year? I mean, a month and a half ago, we were at 4 1/4, and a couple of weeks ago, we were at 340, and today we're jumping back up to 381, 382.
So I think it's important to know that the fixed income market is not the most liquid, and particularly this time of the year, I think flows, get exaggerated in terms of price action. So I think it's important to keep that in the back of our mind. But I do think there's been a subtle shift in the market that was obsessed with inflation through most of this year, as central banks were. And then in the last month, I think recession fears really came up. And the way I would point to this is it was a real rate-driven decline in rates. The number of cuts, Gershon brought this up, the number of cuts being priced in from the middle of next year all the way out to 25, that increased a lot. We had 200 basis points of cuts, Fed cuts being priced from the middle of 23 to 25. So I think the market began to price in recession. We've had some data in the last, I would say in the last month, that is conflicting with this idea that the recession is right upon us. Now, we are looking for a recession at TD, but we're looking for that at the end of 23 rather than at the start. So I think in the near term, we're actually looking for higher rates. But I'm going to use that as an opportunity to start to layer in duration risk. You know, I get concerned about credit risk at some point. As if the economy heads into a recession, you want to be in longer duration treasuries. You want to be in the safest assets. So I'm looking for rates to slightly head higher in the near term and then use that as an opportunity to position for a decline in rates. It's going to be volatile, not an easy ride. But I think rates are going to decline through the course of next year, just not going to be in a straight line because the economy is still very strong.
Well, they're heading slightly higher right now. Of course, rates have come down substantially after we saw that big jump. There was an historic sell-off that pushed rates higher. Bank of America's Mark Cabana says, quote, fixed income is going to have increased value for investors over the course of the next 12, maybe 24 months. You will be seeing yields that will probably be moving lower and yields that have value in portfolios again. For more, let's bring in Bloomberg's Abigail Doolittle. Abby?
Hey, Matt. Well, it's all relative because given the big sell-off that you were just talking about for bonds, that 10-year note relative to price down 14% this year, the worst year since 1999. That, of course, means yields popped higher, all having everything to do with inflation, the Fed hiking. Now, relative to those signs of hope for 2023, the last 2 months maybe are providing them because we have had that 10-year yield come well back below 4%. Earlier, naturally, it had been above 4%. Expectations of peak inflation, Fed hikes to slow, and you can see this massive spike up over the last couple of years out of the pandemic for the 10-year yield. On the other hand, that trend is continuing to hold, so it's hard to say whether or not we're really going to see a reprieve of it, a bit of normalization right now. Let's see what the next couple of weeks bring. But what we do know is that this past year, and we are almost toward the end, so year to date, the classic 60-40 portfolio portfolio, it's down 16.6%, one of the only few down years over the last 15 years or so. And of course, the worst year since 2008. So many of the superlatives this year since 2008. But again, bonds, the worst year since 1999. So maybe 2023 will be a bit of a breather.
Yeah, Abigail Doolittle, thanks very much for that. Let's get back to Priya Misra and Gershon Distenfeld right now. Gershon, what do you think about bonds in 2023? I mean, it's kind of like the dogs of the Dow, right? They've done so badly in 2022 that everybody, I guess, is going to get back in for next year.
Yeah, I think that we have to remember that fixed income tends to be much more mean reverting than other asset classes. You know, we were sitting here a year ago with a 1.5% on the 10-year, and just the what we call the convexity of returns. So yields could go a lot higher and then go much lower, unless you thought they were going to go negative. So I think at these starting levels, and it's not just Treasury yields, it's everything that's based off of it. Investment grade yields at 6% is a level we haven't seen in a long time. High yield is obviously closer to 9%. Emerging market debt is even more. I think the potential for very strong returns is out there. And I think we need to remind ourselves that as bad as it feels today, and it does feel bad, in every time in my career, my 25 years, where it's felt bad, it's always felt bad for different reasons, has been a great buying opportunity. So is there reason to be nervous today? Yes. Do we expect volatility to continue? Absolutely. But I think we're setting ourselves up for some pretty strong returns, if not in 2023, maybe even in the next 2 or 3 years.
Listen to what Jim Bianco of Bianco Research is saying about inflation. Listen to this.
Historically, usually the market has been right, but in 2022, it's been the Fed. If inflation is not on its way to 2%, the market will struggle. I've argued that inflation in the post-pandemic era, inflation is this story, is the game, and it will continue to be. And whether or not it goes back to 2% on its own naturally in 2023, 2024.
So, Priya, what do you expect in terms of inflation? I mean, it does seem like we've peaked and we're on the way down. We went up incredibly quickly. Will we come down incredibly slowly?
So that is our view, that it's going to be really sticky on the way down. I do think, CPI from 7% to 4% can happen a little bit faster. Energy prices, commodity prices are lower. The supply chain issues are improving. It's really getting it lower from 3-4% down to 2%. It's a very high bar, or I should say low bar, to try and get that inflation down to 2%. I think the Fed's going to struggle. The question is going to be, are they going to say that they really want that 2% in 23 or 24, or can they, start to look at the labor market? So our view is that the unemployment rate, when it gets closer to 5%, is where the Fed is going to have to take this really hard call of maybe inflation at 3% is okay because they're trying to help the labor market out. But until the unemployment rate gets closer to 5%, I think that focus on inflation stays high, and the focus for all of us is going to shift from headline or core CPI to service CPI, because that's what's going to be really sticky on the way down. That's really a function of the labor market, and the labor market still looks very tight. We need to see those wages come down to a 3.5–4% level for us to start to feel that service inflation is going to decline closer to that 2% level.
All right, we're going to continue talking with you, Priya Misra of TD Securities, as well as Gershon Distenfeld of AllianceBernstein. I do want to get, though, to something that is slightly distanced from markets, and that is the incredible storm, the weather that we've seen over the last few days, disrupting travel, and certainly it's affected markets in that, for example, Southwest had to cancel or delay 80% of its flights. Joining us with a look at the stocks moving ahead of the opening bell due to this storm is Kriti Gupta. Kriti, what have you got?
Yeah, stealing a little bit of my thunder there, Matt, but of course Southwest is one of the major movers this morning. You are seeing the shares down about 5%, and not just because 80% of the flights have been canceled, but because it's not stopping anytime soon. Tuesday, Wednesday, their flight outlook, their flight schedules are still going to be under pressure. And remember, this is a company, or an airline, I should say, that has hubs in one of the most hard-hit parts of the country by the storm. Think Chicago, think Denver, and it's not alone. Companies like Energy Transfer, National Grid, some of the utilities even are actually under pressure as well. But to Southwest, it's actually the most hit compared to its peers. Alaska, United, Delta, American, that regional hub really not working in its favor right now as we talk about the cancels and the delays. But like I said, it's not the only stock that's moving. Some of the pipelines as well, they're starting to deal with less resources for the storm. So you are seeing this in the commodity market as well. So gas, because of the high demand, because there is a potential fear that they won't be able to deliver that heat that places like Buffalo, New York, for example, really need. Natural gas prices, of course, also higher on the day and reflecting and having a ripple effect across the stock market.
Yeah, absolutely something that's paying attention to. Kriti, thanks very much for that. Kriti Gupta with a look at the storm stocks. Now, the biggest story, I think, for markets really is China removing the last of its COVID curbs. That's coming up.
China is not as clearly a black and white story as it used to be, which is if China's growing, that helps the world economy. Now there's a lot of shades of gray in that story, and that's what bears watching.
That conversation still ahead as the S&P hovers around the unchanged level on this really low volume day, the day after Boxing Day, the beginning of a shortened week. There's a look at New York. This is Bloomberg.
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We anticipate a very strong recovery, especially from the Chinese demand for commodities. And I would differentiate that from other type of goods because China, by far, we believe that the fiscal support required to get to their GDP growth goal will be significant.
China reopening its borders and lifting mandatory quarantines for travelers. This as tensions flare up with the U.S. China dispatching a record 71 warplanes close to Taiwanese airspace. The Biden administration slamming the military drills as provocative. The National Security Council saying in a statement the activity is, quote, destabilizing, risks miscalculations, and undermines regional peace and stability. Team coverage starts right now. Bloomberg's Alan Wan in Shanghai and Jordan Fabian down in D.C. Alan, we'll start with you on the reopening. What remains of the COVID zero policy and what has fallen away?
Well, that's the thing. I think that nothing remains. Basically from January 8th, China will no longer require overseas arrivals to quarantine in hotels. And this is really the last major COVID restriction after dismantle the whole testing apparatus of the past 3 years. This policy has hurt not only has hurt the economy, but left China isolated from the rest of the world. You got to understand that this is just a massive change. but before we had 10, 14 days, and now we have 5 days. And China's still going to require that arrivals are going to have to show negative test results within 48 hours of departure. But you know something? That's like nothing compared to what we have right now, right? Which is 5 days of hotel quarantine and 3 days of home monitoring. I myself, I've had to do 2 long stretches of quarantine because I left China and came back, one for 10 days and one for 14 days. And I can tell you, it's pretty brutal.
Yeah, I believe that for sure. All right, Alan, thanks very much. Jordan, Fabian in Washington, D.C., what do we know about tensions escalating with the Chinese flying warplanes close to Taiwanese airspace?
Well, the White House was hoping that tensions with China over Taiwan were going to cool after President Biden and Chinese President Xi Jinping had that summit meeting in Bali in the fall. But they were clearly alarmed by this military exercise. So some of those planes crossing the median line in the Taiwan Strait, they're really urging China to de-escalate the situation. And look, you could look at these 2 situations, COVID and Taiwan, interlinked as it relates to the United States. I think there's been some hope in the administration that as China opens up to the world, they would sort of resume the diplomacy with the U.S. that was severed after Speaker Nancy Pelosi's visit to the island, and that they could get back on track. And this exercise was seen as something that was not helpful to that effort.
All right, Jordan, thanks very much. Jordan Fabian there in Washington, D.C., obviously, and Alan Wan coming to us out of Shanghai. Priya Misra of TD and Gershon Distenfeld of AllianceBernstein still with us. And we have a viewer who writes in and asks about this very issue. What effect does the reopening in China have, or what impact does it have on fixed income? Gershon, let me start with you. It's obviously a massive economy, the 2nd biggest in the world, one of the fastest growing economies in the world over, depending on how long you measure back. With the reopening, do you see that in rates?
Well, we might. I mean, we're still living in a perverse world where good news is bad news, right? Growth is going to lead to higher inflation, or at least, not higher inflation, but the stemming of inflation coming down. And I think China is a cyclical thing that we have to look at as the largest economy reopens. We have to. That may cause inflation to come down a little bit slower than the Fed would like. Again, that's the dichotomy between what the Fed is saying and what the market is saying. We think there are 2 other reasons, though, that inflation is going to be pretty hard. It's going to hard to get that to 2%, and they're more secular in nature. I agree with Priya, what she said before. Going from 7 to 4 is probably easy. Getting back to 2, you have China reopening, and you have 2 secular headwinds as well. I think the growth of populism around the world, again, this is from well before COVID. Whether you think that's a good thing or a bad thing, that is inflationary in nature. And so is this move around the world to kind of restrict free trade. People blame President Trump for it. I think he gets a lot of the blame, but it wasn't just him. And that's also an inflationary pressure. So I think we have to look at all of those together to try and figure out, is the market going to be right, that inflation is going to come down really fast and the Fed's going to pivot? Or is the Fed going to have the staying power to keep rates high for a long time?
No, absolutely. You've got the reopening of China, which is massive, could be massive in terms of spurring demand. You've got the deglobalization, which I think is a really interesting point, Gershon, because things are going to cost more if you've got to buy them. I was looking at pickleball rackets, for example, over Christmas, and if you buy them out of China, they're $10 a piece. If you buy them made in America, they're $150. So huge difference. And then you've got a $1.7 trillion omnibus. Let's not forget that passed on Friday. Now that's normal budgetary business for the United States of America, but it's still a gigantic number. Priya, do these things worry you?
I think, and they worry me in terms of how much upside there is going to be in rates. They should also worry the Fed. And I think as the Fed has to grapple with the big question they have in front of them right now and very soon will be, do they go 25 or 50 in February? Chair Powell made it suggest that he could downshift again. I think we're not clear what the threshold is for the Fed to slow down or to continue at the 50 pace. But I will say the market's pricing in about 35 basis points of hikes. If they go 25, I think the market's convinced that the Fed is done. And you talked about the upside risk that's coming from both growth as well as is inflation from China reopening, I think the Fed may have a long way to go in terms of hiking, and the market's convinced itself that maybe 5% is where we end up. And what if the Fed has to go to 5.5 or higher? I think that's not priced in. We can even see it in the options market, that the market's becoming more comfortable about the endpoint of the hiking cycle. It may not be that soon.
Priya, why does the market consistently underprice what Jerome Powell says they're going to do? I mean, I'm looking at WIRP right now, the World Interest Rate Probability Screen on the Bloomberg terminal that has become ubiquitous in the rates world, right? The market has a terminal rate of 450 right now, when Powell has said they're going to 4.6, maybe 5, and I think anyone who's seriously watching thinks, of course they're going to do 50 in February, and they're going to go to 5.5.
Right, and that is our call. But it's a great question. Why does the market keep second-guessing the Fed? I think the Fed is operating without forward guidance. I mean, that went out the window earlier this year. It's all about economic data, and I think the market's negative on the economic outlook.
All right, thank you very much to Priya Misra from TD and Gershon Distenfeld from AllianceBernstein. Coming up, the morning calls, and later, setting up for a year-end rally. That's the view from Morgan Stanley's Andrew Sliman. That conversation happening around the opening bell.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is the countdown to the open, and we're almost there. I'm Matt Miller in for John Farrow. Quick look at the markets right now as we see futures doing a whole lot of nothing on the S&P and the Russell 2000. NASDAQ futures are down.
there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago. Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to? I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
The top names at the Fed are on Bloomberg.
I do see growth slowing, but remember that's part of the mechanism of getting demand into better balance with supply and alleviating those price pressures. We're clearly not in a recession right now based on the data. It is an economy that is growing only modestly, and I think it's an economy that's really seeing the imbalances between supply and demand diminishing and inflation coming down.
Nobody covers the Fed like Bloomberg, your global business authority.
This is the countdown to the open. I'm Matt Miller in for Jonathan Farrow. Moments away from the start of trading on Wall Street. We're looking at futures that are very little changed right now. In fact, almost unchanged on the S&P. By the way, 3871 still puts us 100 and change points away from strategist year-end target. The NASDAQ 100 futures are down 0.2%. Obviously, the big FANG stocks make up a huge part of that. And Tesla, which isn't in the FANG acronym, but is one of those stocks, is down in the pre-market substantially. So we'll watch that. Small caps are also unchanged in terms of what we see on futures. One sector to watch at the opening bell, or one that we're going to talk about in a moment, is travel stocks after the storm that we saw. You do see crude rising, although it's down below $80 a barrel right now at $79.95. That's for West Texas Intermediate. Of course, fuel prices make up a huge part of what these airlines have to deal with. Labor also a big part, but you can't account for delays and cancellations. Southwest has had the most of any of the other airlines. Let's take a look at the travel stocks right now, as that snowstorm has wreaked havoc on holiday travel plans throughout the Christmas and Hanukkah season, upending the airline industry, forcing millions to find new modes of transportation or just sticking them where they are stuck. Bloomberg's Abigail Doolittle joining us now for more. Abigail?
Hi, Matt. Well, yes, it really has been a very brutal effect, and sadly with the deaths in the Buffalo, New York area. But relative to the travel stocks, there is that one, Southwest Airlines, that is really being hit the hardest, and that's because their business is being impacted the most. They've canceled almost 3,000 flights. They did cancel almost 3,000 flights on Monday. They're expecting to do a similar amount today and tomorrow, maybe even into Thursday. So they're basically running 1/3 of their operations as the storms across the country really upending their business. That stock down 5.3%. It's not entirely clear why their business is being affected so much. Citi is in fact saying that it could hit their fourth quarter profit. You can see United Airlines, it is down, but down 1.5%, so a lot less than Southwest Airlines. Intercontinental Hotels down ever so slightly. And then it's interesting, Matt, just to check in on a couple other companies, areas that could be affected by the winter storm. We're not seeing a lot of movement for the Toro Company. They, of course, make some of those snow blowers. And then Travelers, the insurance company, it's up ever so slightly. Some of the other stocks to keep in mind, those stay-at-home type stocks like Netflix and Domino's, not a lot of action that could have something to do with the holiday shortened week, Matt.
All right, Abigail, thanks very much. Abigail Doolittle there looking at some travel stocks and others that could be affected by the winter storm that we've all experienced. Now, from airlines to automakers, Tesla matching its longest losing streak since 2018, falling for a 7th consecutive session on a Reuters report saying it plans to reduce production at its Shanghai plant in January. For more, Bloomberg's Ed Ludlow joins us now from London. So,
You know, this has been an absolute meltdown over this year, Tesla shares, but we've seen a huge losing streak that's even historic at this point.
Yeah, 7th straight consecutive decline, the longest streak since September of 2018. And in that 7 days, the stock has lost 25%. It's been a really rough short-term period of the stock. At first, the conversation and narrative was around the concern that Elon Musk was paying too much attention to Twitter, not enough to Tesla, but actually in more recent sessions, the narrative has changed towards what's going on in China. Reuters are reporting that for the first 17 days of January, or 19 days, the company will run reduced output out of the Shanghai plant, and then at the end of January, they will shut down the plant for scheduled repairs and upgrades. That is something that Tesla tends to do on an annual basis anyway, upgrade its plants so that they can ramp up and run more efficiently in the future. But the stock's still at a September 2020 low, one of the worst performers on both the NASDAQ 100 and the S&P 500 so far this year. And of course, it's a stock that's not immune to the narrative around higher rates being a discount to future profits or the present value of future profits. But we are starting now to also talk more about the concern around the consumer. And in China, the most recent registration or insured unit data does show a slight curtailment in recent weeks versus the average of previous months.
I wonder about the problems that Elon Musk creates for Tesla demand, Ed. When I see a Tesla vehicle, I always think of Elon Musk, especially when he's so prevalent in the news, when he's tweeting so many of his political views, which I imagine are probably on the opposite end of the spectrum of most of his customers' political views. Right. Does he drive demand down? I mean, do people not maybe want to buy a Tesla because they don't want to be too closely linked with Elon Musk now?
There is third-party survey data that one should take with a pinch of salt, frankly, of among consumers on their attitudes towards Elon Musk that gave us a soft read that the idea is there are some anecdotal buyers who have pulled back from buying because they were concerned about Elon Musk's brand image, the equity story and the image story around Tesla. I think the most recent substantive way to size and scope that is if you look on the sell side, the recent price target cuts from the likes of Oppenheimer or Mizuho, for example, they talk about the macro and the fundamentals around Tesla, but they basically say you cannot now untangle the story between Twitter and Tesla because of Musk's own equity investments in Twitter, the time that he spent focused on it, but also the views that he's giving on the platform. A broad range of investors, retail and institutional, have basically said to him publicly, please stop or at least pare back both your time and your commentary around the Twitter platform.
All right, Ed, thanks very much. Ed Ludlow there out of London talking to us about Tesla. Now let's get to shares of U.S.-listed China stocks rising at the opening bell, getting a lift from the country's decision to reopen its borders following 3 years of isolation due to the COVID-0 policy. Bloomberg's Kriti Gupta joins us now with more. Kriti?
Well, a lot of green on the screen, Matt, for some of the heavy hitters across the Atlantic today, across the Pacific, actually. So you saw the Alibabas, the JDs, the Pinduoduos, and of course Bilibili's, really that are rising to the tune of 2-3% just in this morning in early trading. What's important to keep in mind, though, is it's creating a bull case for Chinese equities. Remember, you had that massive slide where the entire Golden Dragon Index had dropped some 80% from its peak simply because of this COVID-0 policy. That story is now turning around, really bottoming out, I want to say at the end of October. And now you have seen since that October trough a gain of about 53%. A lot of the story isn't just about they were so beaten down, let's buy in. It's these continued moves to reopen the country and actually entice investors to come back in and pour those funds. But it's not just the ADRs. You do have some China-exposed U.S. stocks that are also catching a little bit of a lift. A lot of them are those casino names. Think Las Vegas Sands, for example, up 2.5%. MGM Resorts not far behind it, up about 0.5% as well. You have Yum China, which is a major, major growing brand. China is one of their biggest markets, of course, for the Young Brands International, up about 2.2%. And of course, Starbucks, another major growth market going into China, all benefiting from this COVID-0 reopening story.
All right, Kriti Gupta, thanks very much, Kriti, giving us a look at the stocks affected by probably the biggest market-moving story of the day. Let's talk a little bit more about that and the rest of the markets with Morgan Stanley's Andrew Slimman saying near-term hope for equities. He writes, quote, with record put buying and record outflows, there has to be a rally nearing. Andrew joins us now. Is that statement, there has to be a rally nearing, Andrew, more hopeful? Or are you just saying things are so oversold that at this point they need to bounce back?
Well, I think it's a little bit of both, Matt. Thank you for having me. The calling us, there's so much bearishness out there right now. I just can't imagine that we're not set up near term for some type of a short-term oversold rally. And, the Santa Claus rally, it seems like a good time to see it. So and then thinking out longer term, look, I understand all the reasons to be cautious on next year, except that's what everyone seems to be predicting. So you really need to scratch your head and say, how could the market avoid this doomsday scenario that so many people are predicting? And maybe it's a recession's not around the corner. So I think short term, there's an oversold bounce coming. And then next year, my comment is simply that if we were going to have a recession in the first quarter, you wouldn't see the value cyclical stocks, the industrials leading. They would be getting walloped right now. They're not. So I really, it makes me scratch my head and say, boy, the message undertones of the market is setting a different signal than what many of the kind of predictions are going into the year.
Well, Andrew, if we don't get a recession, how is the Fed going to bring down inflation? I mean, especially the stickier services side of it. Don't they have to, boost unemployment? Don't they have to hurt workers' wages in order to get those prices to come down?
Sounds logical to me. But maybe, just maybe, the Fed will engineer a soft landing. I think certainly sounds, unlikely, except the market. What is my job? My job is to assess what is embedded in stock prices. And what is embedded in stock prices is they won't be able to achieve it. They will have to bring unemployment up and a recession to follow.
I mean, it is widely predicted, and so I guess you figure that this has to be priced in already. We're looking at valuations that are a little over 17 times earnings for the S&P 500 forward earnings expectations, and I think right now people are looking at $210, maybe $220 in terms of S&P earnings at year-end 2023. Do those numbers make sense to you? Where do you think valuations need to be?
Well, first of all, that's at the S&P level, and the S&P is down 18%. But there are so many stocks down there that are down much, much more because the very large stocks, a handful of them, have held up very well relative to the rest of the S&P. If I check out the top 10 stocks, the S&P is trading at a lower valuation. So, I guess being an active manager or looking at the market from an ETF basis, I would be much more bullish on actual stocks or the S&P equal weighted than cap weighted, just for the reason you say, which is the market doesn't look particularly cheap on a cap weighted basis. I think the vulnerability of the S&P is right at the top, the very, very large stocks. So what we're looking for is companies that are already down a lot, that have priced in a recession because their earnings have been slashed. I don't think that's the real large stocks yet. So that makes the S&P expensive if you have a situation where PEs are, they're kind of above average slightly, and the E is still vulnerable.
The biggest concern, I guess, if you're looking around at sectors that have been hit, has to be housing, right? Home builders and housing sales prices. Everybody has been, crying wolf in terms of the retail housing sector. Do you like those stocks? Is that what you're betting on? That this is all priced in and it's not going to turn out as bad as we expect in 2023?
Well, just to be clear, those stocks peaked long before the housing market turned down. They peaked when mortgage rates started to go up. And even though the statistics on housing has slowed, those stocks have started to rally. Why? Because mortgage rates are coming down. Rates are coming down. So You're either in the camp that believes the Fed is right, or you're in the camp that believes the bond market is right. And boy, oh boy, if I think back, what is the story of 2022? At the beginning of the year, the dot plot said the Fed funds rate at the end of this year would be at 0.875%. And the 2 years said, I don't think so. And the 2 years shot up. And boy, oh boy, the 2 year was right, not the dot plots. And now you have a situation, dot plots are well over 5%. And the 2 years saying, I don't think so. And the 2 years were dropping. So it's my belief that mortgage rates drive these stocks. And that's why they have already put in a bottom and started to rally. And so, very simply, I think they've gone through a recession. They've gone through a slowdown. And to me, that is an area that's of great interest. Not just home builders, but anything to do with the home are down, 20, 30, 40% from their highs, if not more.
All right, Andrew, you're going to stick with us. More from Andrew Sliman at Morgan Stanley coming up, and we'll continue to talk about the travel chaos as well.
This is just unfortunate. There's nothing you can do about the weather. I think everybody probably understands that.
That conversation still ahead. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you've really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of a family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
So you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This this is just unfortunate. There's nothing you can do about the weather. I think everybody probably understands that in general, Delta, United, and Southwest are, I think, the most, some of them are more interesting names. Delta and Southwest just have very good balance sheets. Southwest has a fortress balance sheet. They came through the pandemic really well. They have net cash.
That was Cowen's Helene Becker talking about how unfortunate this winter storm has been, upending the airline industry. And Southwest with a strong balance sheet, but getting hit the hardest in terms of cancellations. Nearly 3,000 flights yesterday alone. The airline writing in a statement, quote, "With consecutive days of extreme winter weather behind us, continuing challenges are impacting our customers in a significant way, and that's unacceptable. The freezing weather disrupting air travel and boosting oil prices amid closing refineries." Team coverage starts now with Bloomberg's Ryan Bean and Abigail Doolittle here in New York. Abigail, let's start with you on oil. We've seen the prices, let's say West Texas Intermediate, for example, climb up to $80 a barrel. Is that due to the winter storm or the China reopening also helping out there?
Probably a little bit of both, and probably more so the China reopening, Matt, because today we have oil up just a little bit, as you were mentioning, up about 0.4%. But over the last 2 weeks or so, we have oil up nearly 15%, basically going from this year's low of $70 per barrel. Of course, this is WTI oil, going all the way up to 80, as you mentioned. Technically, it appears likely to go to the top of its trading range, closer to, let's call it 87 or so. You also have the optics, the war premium of the Ukraine war and the war in Ukraine, and also with Russia last week responding, saying that they may cut their daily output. So lots of factors here boosting oil, but that China reopening probably the biggest factor. Another big takeaway, Matt, we're likely to see oil stay in a range. So even if it does go higher, up toward 85, 87, don't be surprised if it comes back in. Lots of uncertainty for this market.
All right, and then Ryan, we were seeing their Southwest shares down 6%. We heard Helene Becker talking about their strong balance sheet, but they've been hit much harder than any other airline. Why is that? It's just because the location of their hubs, and how do investors, see this working out going forward?
Well, I think there's a few factors at play there. For one thing, you mentioned hubs. Southwest doesn't really operate a hub and spoke model. They operate a point-to-point system where, flights can sort of hopscotch from airport to airport across the country. So if you have disruptions in one location, it can have broad ripple effects throughout the system. And I think that's what you're seeing today. And then, of course, on top of that, the terrible, tragic blizzard that hit Buffalo. Southwest is the largest carrier there. So that's, it's been an incredibly significant impact there. But we've also seen some cancellations in places that haven't really been particularly affected by severe winter weather, which I think illustrates that, Southwest may be having some of its own sort of idiosyncratic, operational challenges, but also, the result of that ripple effect that I mentioned earlier by virtue of its point-to-point system.
Well, I will say from personal experience, I had 2 flights canceled in Montego Bay yesterday, and it was 80 degrees and sunny. Of course, that's because of the ripple effects of things that happen around the world. Does Southwest get back on track? I know the CEO wrote to his employees that that's all he wants to do is get the crew in the right places to get back on track today.
Well, they've sort of been through this before. Remember last fall 2021, we saw some storms that had a significant impact for days. And I think we're going to continue to see cancellations for several days. Just according to FlightAware data, Southwest has already canceled hundreds of flights for Thursday, a full 2 days from now. And yesterday, in their message on their website, they said that they were going to operate about 1/3 of their schedule for the next several days. So it's going to take time for them to get their people and their assets back in the right place where they need to be to operate the system.
All right, Ryan Bean covering airlines for us, and Abigail Doolittle on oil. Thanks very much for that. A Citi analyst writing that these storms could impact Southwest earnings by 3 to 5%. Andrew Sliman back with us. Of course, this is a one-off, right? It's not related to the broader economy, but these airlines have seen some real turbulence since the reopening. Now we've got the reopening in China, which is kind of the big story. What do you make of the effects that we've seen, the volatility that comes out of the lockdown and reopening cycle, Andrew?
Well, to be clear, I think the stocks, the travel leisure stocks were big buys right into the spring of 2020 when we were all locked in our house and the perception was no one was ever going to, leave their house again. Since then, we've largely booked the gains in those stocks and moved on. I've never owned the airlines because they've not been great returns over time, and I learned very early in my career when you are betting on the weather, you're in for dangers. I would hate to be sitting at home all weekend worrying about what the weather was and how it would impact my investment. So I've largely avoided those stocks since the early in the COVID lockdown.
Well, what's your take on China now, Andrew? I mean, not only are they reopening, but it's also the one place in the world, as you point out, I was reading through your notes, the one place in the world now, since the Bank of Japan has jumped on the bandwagon, that isn't tightening.
Exactly. I'll go on a limb and say I think China will be the best performing equity market in the world in 2023. And I say that for number one, just as you said, it's the one place where central bank policy isn't restricting the economy. They're trying to figure out how to reaccelerate the growth rate in their economy. Number one. Number two is, as much as these stocks have started to bounce, they're only back to where they were in September. They're still very, very cheap. And I think you've got government policies that now are encouraging growth, and that's a big change. So I think there's big opportunities in this country.
All right, Andrew Sliman from Morgan Stanley, thanks very much for that. Coming up, the market-moving events you need to be watching. That's next in our Trading Diary.
Vietnamese consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
Get your trading diary as promised, what you need to watch this week. Dallas Fed manufacturing data coming up shortly, followed by pending U.S. home sales. Then another round of jobless claims on Thursday, inflation numbers out of Spain on Friday, and finally the bond market closing early. This is Bloomberg.
Okay, so you're moving in on me. Quick. Distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see you've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close. Welcome to Bloomberg Crypto.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi-Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the number fever campaign. Del Fierro thought Pepsi's number fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack at the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Benegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake. right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance, is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache.
I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system. If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us. The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse. How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa! Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While while the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
this is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack.
In most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest flight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. Very good. 9th class. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation. A language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings, as well as you're going to describe about. Hey, Ruchita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero. I aim to be a top-notch engineer. I am a Swero. I aim to be a top bureaucrat of this country. I'm a Swero. I want to be a very good actor or, a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College. And then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. At Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change all that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park, and inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right? As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges, or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you post it on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, you know, when boring things were happening in the game, I would ramble on about, you know, movies I'd watched or books I'd read and, you know, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You know, you have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. You know, my first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, you know, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while, and I think a majority of people burn out prior to getting to the like profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is live stream shopping, one of the hottest trends in China. Every night, tens of millions of people watch live shows hosted by influencers like Via and buy the products they recommend. On e-commerce and social apps like Taobao and Douyin, the sister app of TikTok.
我觉得已经改变了大家的购物的方式。其实各种各样的产品，哪怕你不买，你也可以来看。当然，你看了，你就有可能会买。
It's not about, only shopping. It's about the experience. It's about having fun. You got to see 3D. You got to see in some kind of action. It's almost like a theater act.
The internet craze has taken over China. By the end of 2020, the country had almost 400 million live stream shopping users. China's live stream e-commerce market has also grown dramatically, with an estimated value of $161 billion in 2020. It's becoming popular outside China as well. So, is live streaming the future of shopping? Live streaming is not a new thing. In China, it started in 2015 with the rollout of 4G, and it was first used for entertainment and socializing. Many live streamers performed for their followers or chatted to them, making money by receiving virtual currency and gifts. In the West, live streaming is mainly the domain of avid gamers. In China, it's broken into e-commerce.
China actually has a very big e-commerce empire, so it uses these super apps, what we call that you have payment, you have search of information, you have recommendation system, and you have huge amount of goods available on the platform, and as well as a lot of consumers. So with this advantage, they merge these features of live streaming to make the influencers actually sell goods.
Here is a perfect choice. Nice neutrals, beautiful print, nothing overwhelming, and the warmth and comfort of flannel. This is item.
Traditional TV shopping involves a one-way direction, whereby a host introduces a product, demonstrates certain things, and say, call this number or something. But live stream shopping is live. That in itself is a very, very big difference. It causes different psychology. And live stream shopping is a very entertaining way of actually engaging someone else.
When you shop, actually, this live streaming video will continue. It will minimize into a corner, and you can buy the items and pay all on the same app. And after that, the live streaming screen will just enlarge by itself, and the promoter will come back to screen. So it's very convenient.
Taobao, one of China's biggest e-commerce platforms owned by tech giant Alibaba, added a live streaming function in early 2016. In the following years, other e-commerce and social platforms like JD and Douyin also integrated this feature.
开头的时候还是有很多的挑战的，对画面的这个流畅，然后是否能够很真实的去还原商品，它其实在这个上面是有很高的这个门槛跟技术的这个卡口在的。
不管是我们的这个用户的接受度，还是商家的这个上手的这个难度都很高。但是这几年下来，基本上难点在不断被突破的。
Over $70 billion worth of goods was sold via live stream on Taobao in the year through March 2021. Latest surveys show that over 60% of live stream users in China were watching shopping shows, and over 65% of them shopped at least once via live stream. In 2020, live stream shopping got a huge boost during the pandemic, when millions of people were in lockdown and many retailers were pushed online.
People, during the lockdown, felt like there's a need for more social interactions. This live platform creates an interesting kind of environment that gives people the sense that I'm actually interacting with you. And then live stream shopping brings in a lot more variety of things that people could buy and satisfy, the sense of like losing control, especially during the pandemic.
At the heart of this craze are the top influencers who have tens of millions of followers and sell products worth millions of dollars every night. They often use their star power to get bargains from retailers, which in turn boosts their own sales and influence.
So if you think about China's live streaming, you have to know the king and queen of the influencers. The queen of live streaming, Via, she is actually having the biggest viewership and the biggest sales volume for a long time on Taobao platform. She can sell everything from like Gucci sunglasses, lipsticks, homes and cars. One time she offered her followers to go on a Tesla ride with her, and she even, for once, sold a rocket launch in her live streaming room for 40 million yuan. The king would be Li Jiaqi, more widely known as Lipstick's brother. He used to be a cosmetic sales before he turned into live streaming e-commerce, and he knows a lot about the cosmetics. So he's the one that will actually put the lipsticks on himself when he's on the show.
Top live streamers like Via and Li Jiaqi have become celebrities in China and can earn millions of dollars a year. Although not everyone can be as popular, mid-ranking live streamers like Tiffany still earn a good income through sales commissions.
如果说单从收入方面来讲的话，那主播的收入是比普通的工作要高很多。但是呢，主播这个工作时刻对身体，包括对精神都有很大的一个考验的。就是每天需要集中精力，然后长达5-6个小时，这种状态是很累的。而且这5-6个小时的话，你是脑子是不停的，然后嘴巴是不停的，然后手也是不停的，眼睛也是不停的。像我们做主播，不是说单一的只做直播一件事情，然后还会有选品的一些工作，然后还会有一些其他的事情排在里面，其实是没有个人生活的。那我觉得增强粉丝影响力的话，不是说某一件事情。可能今天做了什么事情你就增大了影响力，而是每天不断的内容的输出，粉丝不断的可能对你的了解，慢慢的信任你。
没有芝麻酱的味道，如果吃不习惯的话就慎买。
A lot of successful live streamers are generally very good at communication. They're very good at articulating very simply what a product does, what a product doesn't do. In order for them to sell, they need to be trustworthy and appear trustworthy, and they need to show in some ways that they're authentic, right? So for Via and Li Jiaqi, they are able to articulate that quite a bit through their body language, through what they say. For example, Li Jiaqi will also sometimes say bad things about certain products because to him that's his honest opinion, and sometimes people want to hear that. And so they seem very credible, they seem very trustworthy, and don't forget, they're also very entertaining and very interesting. If you're familiar with Li Jiaqi, he won a Guinness record for like the most lipstick applications to models in like 30 seconds. So if you're able to create a lot of buzz with interesting things that you do, people who may not want to buy lipsticks will also stream in just to watch what he does. And then from there, you might get hooked.
这就是你一般女生出门的时候涂的口红的颜色。
Live streamers also use sales techniques such as limited time or supply. This sense of scarcity can often encourage viewers to buy.
The platform in itself creates and enhances some of these things because you see it live. Something we call social proof has taken over, meaning that, hey, other people are interested, other people are joining in, other people want the same product. and they add it in the chat and they ask questions and they say, oh, I want this too. What happens then? It makes the whole product even more scarce.
But it's not just influencers. Local farmers, luxury brands, even mutual funds have also started their own live stream shows.
Working with very top-tier live streamers can be risky. It's not necessary that the benefits will end up with the brand. So we see company executives opening their own shows. And we see like P&G have their own sales room, which runs shows every day as well. We also have like local governors in like small towns to sell their agricultural products. So the live streaming is definitely transformed the way product owners can think about how to reach their consumers. And it enables a lot of players to actually sell.
Live stream shopping is going global. Merchants in Southeast Asia have embraced this trend. And in the West, Amazon has upgraded its live streaming function, adding interactive features like chat rooms. Companies, including Google and Facebook, are also developing and investing in technologies to integrate video and e-commerce.
直播电商它其实已经开始成为主流，它未来的发展空间跟潜力都是巨大的。接下来大家会越来越依赖这种购物方式，会变成一个比较日常化、比较规范化的这么一个趋势。
If you look at the numbers alone, their numbers alone, Li Jiaxi's numbers or Via's numbers, you know that they can sell and you know that they can generate revenue. Are they able to sustain it over a long period of time? It depends on how innovative they are at changing some of the things that they do.
But you can't expect consumers one day turn into virtual shopping for good. There will be the nature of us that crave to go into the store, to touch the goods and actually wear it and see how it looks like and walk around in that with our friends. And those things wouldn't be replaceable with live streaming.
You could imagine that the oceans are actually the largest battery. We're storing huge amounts of energy in the oceans. The wave motion can be very deep. It can extend down several hundred meters. And once it gets to the near shore, from about 50 meters, the whole water column is moving backwards and forwards.
As we search for ways to reduce our reliance on fossil fuels, some are looking to a largely untapped potential source of renewable energy. In theory, waves off the coast of the United States alone could generate over 2 trillion kilowatt hours of electricity a year, enough to power more than half of the country.
Waves intensify and subside not as quickly as the wind, and that means that it can produce a smoother power generation curve. One of the potential advantages of wave energy is that it could act as a complementary source of power compared to other renewables on the grid if it were to be scaled up to commercial scale.
For decades, engineers have been trying to convert wave energy into electricity, but a host of technological and financial challenges have complicated their efforts.
In the years from around 2006 to 2015, there were a spate of bankruptcies in the sector, and this was largely because of a lack of kind of continuous proven projects out at sea with reliable electricity generation.
Since then, companies have been trying to develop the technologies at a steadier pace and with a smaller cash burn. But the same questions remain. Can companies develop devices and technologies that actually work? Is wave energy just a novelty or something that can become a major renewable energy source?
The sea is a very challenging environment within which to operate a power project. So seawater is corrosive and conditions are very rough. So this means that power projects don't have a very long lifetime, and it increases operating and maintenance costs.
Partly because of that, many early wave energy projects hit rough waters, such as the Palamas Wave Energy Converter in Portugal and the Isla Limpet project in Scotland. But that hasn't stopped others from trying.
Companies are focused on testing projects out at sea, proving their durability, trying to raise capital and bring down cost. The sector hasn't really converged around one single technology design, and companies are kind of undecided about which design works best.
Finland-based AW Energy is a veteran in the sector. The first proof of concept of the company's device was made in the 90s after diver Rauno Koivusaari observed the strong back-and-forth movement of a hatch cover in a shipwreck in the Baltic Sea.
The waves are generated far from the coastline, so the wind blows on the surface of the water, causing the water particles to rotate, and that rotation extends deep down below the surface, and the waves can be very long. They can be several hundred meters long. And as they come into the near shore, this rotational energy turns into an elliptical energy, and eventually backwards and forwards, as you probably noticed if you've been swimming on the seashore in large waves, you're pulled in and out. That's the energy that we're extracting. But there's a sweet spot where we deploy, so around 10 to 15 meters of water depth. That's where there's still strong wave energy coming in.
After years of research, prototyping and testing, the company has deployed Wave Roller, a 350 kilowatt device in the waters of Portugal. Wave Roller has an 18-meter wide and 10-meter high steel panel fixed to the seabed via a floatable foundation. The panel moves back and forth with the waves, capturing the energy.
It's submerged in the depth of 15 meters, so it's protected from the extreme waves. We generate electricity by capturing the movement with hydraulic circuitry in a machine room underneath the surface. That hydraulic energy we turn to electricity with hydraulic accumulators and hydraulic motors, and also a generator.
The Wave Roller has survived large waves at sea for over a year and delivered electricity via an underwater cable to the grid in Portugal. Meanwhile, the company has won a €2.5 million grant to work on an upgraded version of the Wave Roller, aiming to increase the electricity generation capacity to 1 megawatt. The upscaled device would have a bigger panel, 2 power takeoff units, and improved software to control the energy production.
We have taken into use a wave prediction algorithm that kind of tells us what kind of waves are coming into our device. That gives us few seconds to prepare for capturing more energy, and the difference in that is significant.
Our future plans are to deliver technology around the world. So I'm hoping we can be working on delivering technology to projects in Asia and also in the American continent as well.
Meanwhile, Israeli company Eco Wave Power is taking a different approach to capturing the power of the ocean. For the company's founder, Ina Braverman, developing new sources of renewable energy is a personal mission.
I was born in Ukraine in 1996, and 2 weeks after I was born, the Chernobyl nuclear reactor exploded, causing the largest in history nuclear disaster. I was one of the babies that got hurt from the negative effects of such explosion. I had a respiratory arrest and a clinical death. Luckily, my mother, a nurse, approached my crib on time and gave me a mouth-to-mouth resuscitation, which saved my life. I got a second chance in life and decided to do something good with it.
Growing up, Ina wanted to be a politician to positively change the world. After working as a translator at a renewable energy company, she decided to change paths.
solar and wind energy were fully commercialized, there were a lot of amazing technologies implemented everywhere, I saw that wave energy, although it's an immense source of electricity, the biggest companies in the world are trying to develop wave energy with no success. And there was kind of a race going on in the world of who is the company that is going to develop a viable wave energy solution first.
In 2011, the then 24-year-old Inna co-founded EcoWave Power. Instead of installing devices offshore, the company's devices are attached to existing breakwaters, jetties, and piers.
Our technology is very cost efficient, especially in comparison to the offshore technologies, because we don't need any ships, divers, underwater mooring or cables. We install on existing man-made structures, and all our expensive equipment, the generator, the hydraulic conversion unit, the automation, is located on land just like a regular power station. This is the EcoWave Power conversion unit that has been operating in Jaffa Port since 2014 until 2020. Here you can see how the technology works. Basically, the floaters are going up and down and pushing the hydro cylinders, which transmit biodegradable fluid into land-located accumulators. A pressure is being built. The higher the waves, the higher the pressure, which is used to turn the hydro motor, which is turning the generators. The whole system is controlled by a smart automation system, which you can see right here. And in case of upcoming storms, the system automatically raises the floater above the water level and keeps them in the upward position until the storm passes.
The company has been operating a 100-kilowatt grid-connected device in Gibraltar since 2016, which is enough to power 100 households. Currently, Inna and her team are working on another 100-kilowatt project at the port of Jaffa in Tel Aviv.
The project will be also the first time in the history of Israel that wave energy will officially connect to the electrical grid. And our goal going forward is to expand it to all suitable breakwaters in the city of Tel Aviv and to supply a significant part of the city's electricity needs.
Today, engineers and entrepreneurs are still trying to crack wave energy. Globally, only a few hundred kilowatts of wave energy are deployed, compared with gigawatts of offshore wind. But the field has come a long way in recent years, and with the right engineering solutions, this new power source could eventually become competitive with more mature renewables like solar and wind.
I would have a lot more confidence in the success of wave energy companies today as opposed to like 20 years ago. But in the next few years, or maybe the next couple of decades, it will be more likely to be used in remote locations like islands that are otherwise dependent on expensive diesel power, or out at sea on gas decommissioning rigs, or for powering underwater autonomous vehicles.
So definitely, wave energy can compete with other renewable energy sources, but I personally believe that this is not a competition. In order to have a 100% renewable energy friendly world, we need all renewable energy sources to work together.
Who are all these people from?
So can you please tell me? I'm not going to... please wait.
You know, I've covered a lot of companies. I've covered a lot of Machiavellian companies where, you know, people play rough. I don't think I've ever seen anything on the scale of Nissan.
He's making you, but you act from this side. I mean, it's corrupt. The system is...
One of the most dramatic elements was Ravinder Passi's home being raided by court officials in Yokohama.
You scared my wife. You scared my children. I worked in this for 16 years.
So Rav Passi's journey into the darkest recesses of the Japanese corporate world started when he was the general counsel, the highest corporate lawyer position in the company.
In the past few minutes, Nissan has revealed that its chairman has been arrested after allegations of serious misconduct.
He was tasked with investigating Carlos Ghosn. And he was told, conduct an internal investigation and get to the heart of the matter. And then along the way, he started to notice serious conflicts of interest.
He is one of the few people who knows an extreme amount of detail regarding the alleged crimes by Carlos Ghosn. And he's now ready to tell his own story on the record about some of the events that happened.
My name is Ravinder Passi. I'm the former Global General Counsel of Nissan Motor Co. Limited. And you could say, yes, I had a front row seat in terms of what was going on.
When Carlos Ghosn saved Nissan years ago, he was depicted in Japanese comic books as this hero, and now maybe we'll see comic books where he's the villain.
In corporate Japan, Nissan was quite an unusual company. It was led for 2 decades by a non-Japanese executive.
Well, Carlos Ghosn was a hero in the Japanese business world. If you had a global business celebrity in Japan and worldwide, it was definitely Carlos Ghosn.
In a country with few foreigners at the top, he stood out. But over the years, he saved Nissan from bankruptcy, allied with Renault and Mitsubishi, and turned the alliance into one of the most competitive in the world.
Yet as the years went on, you know, I think his ambitions changed a little bit. He started thinking about legacy plays, and one of them was to really tighten the alliance between Renault and Japan. And unbeknownst to him, there was a contingent of senior Nissan executives that were really felt threatened by that move. They really thought that they would lose complete control of the car company, and even in the government, there was probably a little bit of anxiety about a national champion in the auto industry falling under full-blown foreign control.
Carlos Ghosn was an auto industry leader, respected by many in Japan. Now he's in jail.
The arrest of Carlos Ghosn came completely out of the blue. This was in November of 2018. He was coming to Japan on Nissan's corporate jet for a regular executive meeting, and he was met on the tarmac by Japanese authorities who whisked him away to a jail and charged him with financial misconduct crimes.
So what happened was that a power struggle ensued inside the company, and somewhere along the way it was criminalized. By that I mean that there were allegations leveled at Carlos Ghosn about the way he reported his pay to Japanese authorities, the way he handled money inside the company, that in other contexts might have been a board action, might have been handled internally. A number of executives at Nissan decided to take this difference and take it over to the Tokyo prosecutor's office, and that unleashed a chain of events that would shake the entire auto industry.
So after Carlos Ghosn was arrested, Nissan launched an internal investigation into the events that led up to his arrest.
So Rav Pasi was tasked with investigating Carlos Ghosn, and he was told, get to the heart of the matter, find out what Carlos Ghosn did wrong and bring it to our shareholders.
It's really complicated because you had various things coming out of the weeds. 2018, the investigation has started, and we become aware of matters in terms of conflicts, actions by certain individuals that cause some concern because things might not quite be what they seem.
So in our story, we really took a close look at Harinada and his role in Carlos Ghosn's downfall.
Harinada is one of the most fascinating figures inside Nissan. He's also a lawyer. He's originally Malaysian. Hello, Mr. Hari. And he had a meteoric rise through the company and became very, very close to Carlos Ghosn and other top figures. He had a front row seat at all the major strategic deliberations at the company. And when he discovered that Carlos Ghosn, as his final legacy play, was going to tighten the relationship between Renault and Nissan, he made a decision to go against Carlos Ghosn. And he became one of the key figures that decided that Carlos Ghosn had to go.
Harinada was somebody who actually recruited me into the company, so I have a long-standing relationship with him, or did have a long-standing relationship with him. For many, many years, he was a mentor. I had doubts about the credibility of the process right at the start. Harinada had a plea deal with the Tokyo prosecutors. Now, that suggests he was intrinsically involved in some of the wrongdoing, or the allegations of wrongdoing, and it just didn't smell right, just doesn't sit right.
So there was a basic conflict of interest. In other words, Harinada had to deliver results to Japanese prosecutors to avoid his own criminal liability, and he's accusing and leading the investigation of Carlos Ghosn.
Some of the people who had been involved in the original alleged crimes were also looking into the affairs themselves. Ravinder Pasi began pointing out some of these conflict of interest issues. And the reason for that is essentially his concern was for the company. If the company's own investigation into itself was compromised, that could lead to a very weak position in various lawsuits that it was dealing with across the world.
I had discussions with Harry, discussions with the statutory auditors about these conflicts, discussions with HR about some of these conflicts, because at that point, we reported into him. You know, at the time, everything was quite, as you can imagine, it was, we've got to do this, we've got to do that, we've got to move fast. But when you step back and look at some of these things, you just think, my God, what was going on here? Because me, members of my team, were being placed in immediate danger. Your chairman's been arrested, a representative director's been arrested. They both happen to be foreigners. And then now what we need to do, we're being instructed to do, is certain compliance professionals need to go into properties in Brazil, for example, and retrieve evidence. They've got to do it very carefully, because if they don't do it carefully, they're going to get convicted of criminal activities. And likewise, when a team of lawyers were commissioned to go to Lebanon, I mean, one of my immediate concerns was, why are lawyers from Nissan being sent to go to Lebanon to retrieve evidence? These are just lawyers, they're corporate lawyers from Nissan. You had revelations that a number of executives had benefited from share appreciation rights when they shouldn't have. I mean, you know, substantive amounts of money being taken by these guys when they weren't entitled to take them. And you do think, yes, how is this going to look later on? It's going to look quite concerning. So that triggered for me the sort of assessment that, well, I'm going to have to do something, because up until this point, I haven't put down on paper these conflicts and these issues.
So Rav Pasi makes a fateful move. He writes this letter to the board listing every suspicion he has in great detail, backed up by evidence, backed up by memos, of why this internal investigation had serious problems. He sends the letter to the board and it's crickets. He doesn't hear much of anything.
Nothing happened thereafter. Nothing at all. Just like it just gone into a black box.
And he began to suspect that there was a desire, even at the highest level within Nissan, to kind of sweep these conflicts of interest under the rug.
Unfortunately for me, I think, again, with hindsight, people must have thought that this is the nail that's sticking out, and we can't have this. Within 3 days of me submitting that to the board of directors, that letter to the independent board of directors, I was removed from the Goan Executive Conduct Matters. I was then told that I could not attend board meetings anymore. And up until that point, I had attended every single board meeting. I was then also told that after 8 years of being in Japan, I'd be going back to the UK. It eventually transpired that I'd be the VP of Projects and Transformation, managing a team of 3. So you can imagine what this feels like at this stage. Almost an arbitrary removal from Japan, where I've lived for 8 years, had 3 children there, my family has grown up, and we've been settled there, having a few months earlier been promoted to vice president at a global level, to being almost demoted.
So Pasi was essentially being reassigned to get him as far away from the internal investigation as possible, and also to a certain extent in retaliation to some of the issues that he brought up regarding the internal investigation and Harinada.
What happened to Rav Pasi can be seen as a series of corporate humiliations. I mean, first of all, his immediate responsibilities were taken away from him. Eventually, he lost, the coveted general counsel title. But it didn't stop there. Toward the end of his stay in Japan, Rav and his wife were convinced that they were being followed.
During that period, I'd noticed that whilst driving my car, I'd have other cars following me. First time I noticed this was around mid-March, and I was driving, I can't remember where I was going, but this grey van, small van, just literally started following me. And I noticed that there was somebody in the car taking pictures. And lo and behold, we were absolutely being followed either by people on foot or other individuals, 2 or 3, normally 2 burly men in a car, different cars at different times, following us around. They were following the family as well. And, given I'd seen the Nissan security department behave in a very, very egregious manner with others in terms of following and surveilling, I was very concerned as to what they were doing and who they were giving this information to. Because if they're giving this information to the authorities, you do think, why? What's going on here? I mean, this is just not normal behavior.
And this all culminated in a rather dramatic event in the middle of 2020.
Who are you people?
Where Nissan had hired a legal team and had obtained an unusual court order from the district court in Yokohama
to basically do a search of his home and seizure of his corporate laptop and phone and other documents.
If you don't let us in now, we have to break this key.
So it's a pretty extreme way to treat someone who'd spent 16 years at the company.
These people have all come in. We don't really know who they are, apart from the fact that I've been shown a badge that says the Yokohama Court. And they're here to recover a laptop and a mobile phone. It was even more weird because I'd highlighted to the directors that certain Nissan executives were trying to recover this laptop and this phone whilst I was still in Japan. And I was very concerned because it had evidence on there that related to misconduct matters and other forms of inappropriate conduct. It was just another form of intimidation, another form of harassment, forcing me almost to leave the company and the country. Because once they'd retained and obtained these items, we were still followed, which, again, I just couldn't understand. What is the point of doing that? You know, this is a car company. This is not the KGB.
I think it's fair to say that Rav Pasi didn't have full battlefield awareness of all the intrigue going on at Nissan. I mean, Hari Nada is interesting because he's both charismatic and charming, and one of the most brutal corporate infighters one could ever run across.
This is a confidential company email, right? You should not have this.
If he had fallen into line, he would probably still have his job at Nissan, be paid very well, and continued his work.
A career that he spent 16 years building at Nissan is irretrievably broken. It's been smashed to smithereens. He and his family paid a huge price, certainly. But in terms of being able to sleep at night, I think, he's come out ahead.
I highlighted issues to the highest levels of the company so that they could be dealt with appropriately by those in charge. There was no response to those, and there was retaliation against me. What's really profound, like absolutely profound, is that none of your colleagues, I mean people who you have known for years, forget it.
Yeah.
You're on your own.
Yeah.
And you've got to be ready for that. You've got to be ready for that. If you take it on anyway.
This is the awful truth. There's always someone in the family that's pushing it.
This lady does not deserve to be taken advantage of, especially at your age with your own grandchild.
Yeah.
My grandma is having to sue them. I'm testifying against them. Nobody's talking. They're one floor below right now. I get afraid to go on the elevator. It's sad that it had to devolve to this.
It's like a soap opera to me.
It's a very sad thing.
It's a family feud.
A family feud.
Here's a family that, on paper, you would think has the wealth that so many people seek, yet at the end of the day, it seemed to sort of rip everybody apart. My name's Tom Schoenberg. I'm a senior reporter here at Bloomberg News, cover financial enforcement. I was approached by someone close to the Schottenstein family and asked whether or not I would be interested in writing about Beverly Schottenstein and this case that she had against J.P. Morgan. And it was immediately clear that there was a great story here to be told. So I started just, assembling all sorts of documents that the family made available to me. That included a diary that Beverly had begun writing when she started having suspicions about what was actually going on with her money. Beverly obtained her wealth from the Schottenstein kind of retail empire that has at times included Big Lots, Value City, American Eagle Outfitters, DSW Shoes. Beverly's husband died, and at which point they sold off their portion of the company, bringing them an enormous amount of wealth at around 1990. Estimates of her wealth were around $90 million. She, for many years, had that pool of money being managed by outside advisors. Her grandsons in the late 2000s had both graduated and were becoming financial advisors. She gave them a little bit to work with, and over time, her grandson, Evan, became the trustee of her entire estate. Managing sort of family money is not a conflict. In fact, some ways in wealth management, it's kind of how you get your start. It's kind of the seed that you need to sort of get going in the business. But Beverly started having suspicions that something was wrong probably in around 2016.
Well, there were suspicious things, but taken separately without everyone talking about their own experiences, it was hard to really put it together.
She had written a check to her caretaker, Dawn, that bounced. So she went down to her local Chase branch to sort of find out what was going on. She wasn't getting paper statements in the mail, so she asked them to print out a number of her statements having to do with her checking account and her credit card account.
So we went to the bank and asked for the statements. And she got a whole year and going through all of them, page by page by page.
And it was there she saw all sorts of charges that she said she didn't authorize or didn't know about.
I was becoming very, very suspicious. I was starting to look in the money part, and that's what bothered me more when I saw that money was going, and I was not a big spender.
Around the same time, Dawn, she starts noticing Beverly's son, who lived in the condominium below her, came up with Evan with a shredder and started grabbing papers in her office area, including some with J.P. Morgan letterhead, and just started sitting at the kitchen table, just shredding documents over and over.
Yeah, they came in one morning.
They used to do it in the back.
Through the back door, and they brought the shredder inside. And then they went in the drawers in the office and took out all the papers, and they started doing it. I was very suspicious because I know you don't go around and destroying papers.
Beverly said that they had done this many times before.
That's when she said to me, Dawn, I'm going to write my feelings in this black book.
Diary.
And it's a diary, and she started writing. Each day, she would write a little at a time.
Around the holidays of 2018, a package had arrived, a FedEx package, and in it were materials about a venture capital fund based out of the Cayman Islands. Dawn and some other family members take a look at this, and they see that Beverly is signed up for this fund to the tune of $5 million over the course of several years.
And that was really the beginning of it. That was sort of the tip of the iceberg when it became obvious that something was going on, that my grandmother really wasn't aware of this fund.
You know, Beverly started to panic. She got really upset and called, JP Morgan's headquarters in New York and asked for Jamie Dimon. She said she was told someone would call her back, but she says that never happened. She wrote a letter to Evan and Avi, and in there she laid out a number of things that were concerning her: unauthorized trading, the checking account. She had about $1 million worth of jewelry in a safe deposit box, and that her son Bobby had the key to that box, and that jewelry had gone missing. All this was kind of packaged in this, 5-page handwritten amendment to a will and trust.
There's such an evolving narrative about why the jewelry was taken. The only truth we really know is that the jewelry is gone. But why it happened, there have been a lot of different stories.
You just don't take your mother's wonderful things and hand it out.
And they emailed that note to J.P. Morgan.